There you go.
Okay, did that turn it on?
It's on.
Boy, I appreciate Mark very much. It must have gone off when I did that.
No worries. Well, I get to hear everyone else present the whole class, and then I get the last one to officially present. You put me behind Fallon and in front of Dina. Thank you very much for that. Two of the best presenters I've ever seen. So I'll give it my best shot. Hey, it's almost 9 o'clock. What is it? 9 o'clock here on a Friday night. Let's talk financial trends. Let's do this. For those of you watching the sales trend, the first few years, that looks very similar to all the ones we've seen this week. The recession, we all lived it. We all experienced it. Money was scarce, and Toyota was impacted just like the rest of the industry and a lot of other industries. And you see the increase as they move ahead through to 2013. 2014, a sharp drop. And I had to do some research on that. And really three factors. The biggest one was gas prices fell tremendously. We all enjoyed that. Here in the States, it was over $4 a gallon and got down to around $2. And therefore, Dr. Roney touched on earlier, we, as I guess Americans and just overall in the world, people felt they didn't need to have as fuel efficient vehicles anymore. They started buying the big Suburbans and, Explorers and that type. And that's not necessarily the sweet spot for what Toyota does. So they did see a dip there in 2014. There were two other factors. China actually had a dip in the economy. Their GDP was double digits forever and ever, and it finally kind of came down to earth a little bit. And although Toyota isn't where they want to be in China, them not being, where they were the previous year definitely had an impact as well. And lastly, Toyota had a strategy where, when they saw things kind of going south, they kind of didn't halt production, but they slowed down production. They didn't want to get caught with the same gluttonous inventory levels that they got caught with in 08, 09. So they kind of had some measures in place to kind of control inventory, which kind of did not help them in sales. They didn't have as much inventory on hand. So those were three big factors that definitely did not help them, but they recovered nicely and have really shot up to pre-recession levels since. Looking at operating margin, we touched on it earlier. They really are the class of the group there. I think Nissan was in the high sixes earlier in Fallon's section. And, Toyota is up there in double digits and really have recovered nicely in the last 4 to 5 years. And no reason that won't continue as well. We'll touch on that later on. As far as ROE, ROI, again, trending in the right direction. Leverage it's a different leverage calculation than what you may have seen earlier. This is debt to capital versus maybe some others that Fallon had on her slide. But essentially, best-in-class type leverage, their debt levels are lower. I know earlier in the week we saw Harley in the 70% range. I know different group, but in general, other companies, Ford, GM, are north of 50% in this same category. So they're in a position to finance, acquire, et cetera. If they really want to get aggressive, they are in a strength position there.
Good summary, Mark. By the way, when did Fukushima happen? Was that in 2014?
I think it was 2011.
Was it 2011?
Yes, I believe so.
Oh, okay. That long ago. All right. I wondered whether there was anything like that going on, but I guess not.
And then we go into long-term debt. Steady increase there, not, huge margin, but definitely a percentage increase. You'll see a dip in stockholders' equity in 2014. That's the same year as the sales dip, totally unrelated. They had a stock buyback there, one of the biggest they've ever had that year. So that impacted stockholder equity, return on equity, affected a few things there. So that's one of the kind of trend outliers that kind of went sideways for a moment there, but there's your reason for it. And capital growing substantially as well, industry leader there as well.
Yeah, when you've got, you still have $130 billion of equity and capital of $250 billion, a small buyback of stock is not actually a bad thing. It's completely acceptable.
Now, when I read, we sit on that kind of cash. I mean, you don't really have anywhere to invest it. There's nothing wrong with giving some of it back. So yeah,
Exactly.
I agree. And here's some of what I was just talking about earlier. I also did Volkswagen kind of got their foot in 2014 a little bit stronger, even though China's economy was slowing down. Volkswagen, it doesn't have the baggage of what Japan's trying to overcome with the cultural and the history. They actually really became bigger presence. And if you look over the last couple of years, Volkswagen's kind of edged out edged out Toyota. And I'm sure that being in China definitely helps a whole lot. I haven't looked at Volkswagen, by demographic or by geography, but that can't hurt to be where half the cars are being sold. So good work by Volkswagen there as well to help out with some of the sales decline. And we can move on. CSF report card, a little bit different than what Fallon showed earlier. I'll give you some kind of background here from a quality standpoint. We used consumer reports, broke down reliability, road test quality, and overall customer satisfaction. Those scores were, overall probably the lowest versus the rest of the research I had. But in the end, Toyota still was, there at the top, tied with Tesla on quality. I'm going to talk about Tesla here in a moment. But R&D, electronics, batteries, self-driving cars, kind of in that game, powertrains. Toyota is up there, always an innovator. You'll see Tesla and Volkswagen in that game as well. Design engineering, basically how does the company put everything together? Again, high scores for Toyota. And others have improved. If you look at a few years ago, everyone's getting better at this. As the gaps between the U.S. companies and the foreign companies have gotten a little bit narrower, I should say. And process engineering, you referenced Kaizen earlier, just the continuous improvement philosophy. I think we have some slides on that later in implementation, but really the total quality management, just-in-time inventory. Toyota does a great job of selling high-value products with big margins because they're so efficient. And that's why even though their sales are maybe partially eclipsed, they're 1B to Volkswagen's 1A last year, over 10 million cars sold, they still had higher revenues because they're working on much better margins and overall charge higher prices for their products, just for their overall setup. And for dealer systems, everybody's kind of middle of the pack there. I will note that several articles I read talked about how Ford and GM specifically, after the financial crisis, really reevaluated their relationship with their dealer partners and how important it was. They realized, man, without these guys, we're dead in the water, and really put more emphasis on building those relationships so they can thrive during the good times and really make it through the tough times. And a lot of investment, a lot of time, effort, resources put into that. So that's a priority for everyone. I think the U.S. Manufacturers have really closed the gap there. In some cases, gotten better with their partner alliances. And you see the overall averages there as well.
Oh, you're not going to talk about Tesla now. You're going to do that later?
I'm going to do that here, and probably when we get a little bit closer to the goals.
Okay.
Forward thinking. Yeah.
One quick question. I noticed that nobody gets an A for dealer systems.
Yeah, I couldn't find a consensus that really, every time I found an article, it would knock down someone else a little bit. And it was kind of my own judgment there.
Uh-huh.
Ford and Hyundai had the least marks against them, I guess, in my research. But yeah, I probably could snuck one of them in there with an A- or so. But there was always seemed to be something.
Okay.
One article about one would be bad about another, but they weren't PR type articles. They were legitimate Forbes, business article type stuff, Wall Street Journal, etc.
Okay.
And here's a little bit of a summary. I touched on a little bit of this, and I'll talk a little bit about Tesla here, I guess. They are the future of what we're doing here. I put in they're trendy, they're intriguing. People are investing in them. They see, Fallon talked about research and development. They're really pouring their money back into their product, trying to really reinvent. Saw an article that today Elon Musk presented or just mentioned and showed a picture of his new semi-truck, fully electric semi-truck. So, not ready for anybody yet, but they've got it. And they're going after every angle of this thing. It's not just small cars and plugging in and going to the coffee shop. They're going after the commercial side as well. And people are believing this product. 10 years ago, Tesla was just a word, almost like a .com type thing. And they've got a lot of teeth and a lot of financial backing. And really, you think about the stick shift was the only thing you had until 1940. And I was reading an article about this. It was fascinating. Automatic was introduced in the early 40s by GM. And everybody's like, it's automatic. You want to have a stick shift. And then gradually, as we all know, the automatic was eventually the major player there. But in the 90s, it was still 25% stick shift in the early 90s. Now it's 3%.
Yep.
And that Ferrari that Dr. Roney's going to buy, they don't even make a stick shift anymore. And I bring that up because, when you're driving around that Ferrari in India where you want to hang out with that awesome government and that whole economic system you got there, the automated cars and self-driving cars, electric cars, that is where we're headed. If we were having this call in 1940, it would be kind of amazing. And that's when I started my college, I think. It feels like it. But automatics, like we're talking about self-driving cars. We don't see it as a big deal. But the millennials, there's some that are being born now. I don't know what they're going to be called out, Generation Z, that generation, whatever they're calling them going forward. They may never drive a car. And by the time they get to that point with the advances in technology, that's why the Tesla is so important. They sold 76,000 cars last year. Toyota will sell that this weekend. And yet Tesla is taking up a lot of the headlines because they are positioning themselves aggressively to be ahead of the curve. And when these young folks start driving, it's going to be the automatic. It's the stick shift, the gas cars. They're not going to be around. So that's my Tesla spiel there. And I'm going to move on if that's okay.
Can I add something to Tesla, Mark?
All right. Please do.
You were saying they're poor dealers, the dealerships and all those. Another thing, while it's great that they're beefing up their charging stations, I don't know if anybody knows, in the past, Tesla didn't charge their new car buyers to use the charging stations. Well, to fund this $7.5 billion project, guess who doesn't get those for free?
Yeah.
So while the cars are great, I don't know if people were necessarily expecting to have to pay for it. And I'm sure, those interested are still going to pay. It's got to be cheaper than gas in the long run, or at least we hope. That's the idea. That's the whole reasoning behind it. But just, you were saying poor dealer relations and things like that. And that's just another added thing. While Tesla's cutting edge, you got to work on that customer service and, just a little bit more than just their innovation.
Yeah, you're right.
I'm beginning to imagine the debates that have gone on in this team between Mark and Fallon.
They're debates.
It's a good debate. That's a very, very good, a good point. Somehow, and in this thing that I was in last summer, there was a whole lot of attention of exactly how you're going to put these charging stations around a nation so that they're readily available. And there's a whole technology to that. But that's another issue. Nevertheless, it's relevant.
Okay, I'm muting.
Yeah, thank you, Fallon. No, the good point, though, is if gas prices would go down, if supply is too big, demand goes down, Tesla's game plan could totally backfire, because why buy a $40,000 car that, can't find a charging station if you can get gas for $1.50? So people make those decisions. So
moving on.
Acceptable risk. Basically take this from the bottom to the top for the goals hierarchy. Acceptable risk. Toyota is in a strong position we talked about earlier. Volkswagen, solid. GM, Ford, although not poor, relative to their competition, not where they want to be. As far as acceptable profitability, our friends Tesla are down there off the grid because they don't make a profit. They've had a couple profitable quarters, but they are not a profitable company yet. I'm not buying a Tesla, don't get me wrong, I'm just saying. Toyota is, on the other hand, the most profitable, and you see where everybody else falls. Our team did a great job of talking about the market and China being just a tough struggle on the wrong side of that line right now. but there's a lot of upside there, and we could definitely get better with getting Toyota more share, without a doubt, as relations get better and as generations, et cetera. India, Dr. Roney's favorite place. They, that's one of those places. Toyota seems to have some good vehicles going there, not quite the market share we want. U.S. and of course Japan being their home market, they are golden there. And from the long-term side, there's not a lot of long-term growth in the traditional car. I mean, it is that's how things are paid for. But as far as growth side, self-driving, hybrid, electric, fuel cells, et cetera, and robotics I put on there just as another growth industry they're just now getting into. And I'll leave it there. You have a question, Dr. Roney?
Was it that obvious on my face? It's not a question, it's more of an observation. I think you've done something with my model. It looks like, let me see if I can do this here. It looks like you have done this. Let me see if I can get this right here now.
Did I break the model?
No, I think you've improved it. Hold on, because I want to give you your due here. Let's see. So it looks to me like you have you've taken these horizontal lines and you've put a scale from left to right. So on the left side is lowest and the right side is the highest. Is that correct?
Yes, sir. That's correct.
You are the first person who's ever done it on this model. And so if I copy that little sucker and I paste it here, if I've understood your method correctly, you say that the least risky, the company with the most favorable risk proposition is Toyota, whereas Ford, I'm not sure it's Ford, by the way, but Ford does certainly have a very, very high leverage rate. So your rationale goes without need for explanation. Ford's leverage is really high. So I get your point. And then we have to do something a little different. And that is that when we come up here, what you seem to be saying is not about the industry as a whole, but in this case, it's Toyota's position. And Toyota's best market position, of course, is in Japan, and that's quite true. And its least favorable market position is China. Right again?
Yes, sir.
Boy, you've done me a big favor. I'm serious.
As long as you like it.
May I have your permission to use this in my publications and my classes, because this is new to me and it's a hell of a lot better than what I've been doing.
As long as you like it, you can do whatever you want with it.
Well, if I did it without your permission and I put it in a publication, you could nail me for plagiarism. So I need your permission.
You got it. It's on the record. I see the recording. It's all yours.
This is a really yeah. Well, he's going to get some kind of credit for this. But this is a very imaginative and innovative use of the model. And I just want to acknowledge it and thank you for it.
All right, well, thank you. I appreciate that.
Now we appreciate each other. Where do we go from here?
We can move. I think we're
We've gone past the hierarchy. So are we here?
Yes, sir.
Okay.
And a lot of what I said here was earlier here, but the toughness with China and India, the bureaucracy of the government, the cultural issues, the history with China, that's going to still be there. But again, that's the reason there's so much upside to both of these countries, and Toyota's, doing their part. And, other than that, I've hit on pretty much all these points. I didn't type up the 1940s example, but everything else is in there. So let's move to the goals. Let's see where we're headed in the next 5 years. The trajectory really looks really good for sales as the relations thaw with China, as India becomes more stable, I think Toyota's in a great spot. They're making great products. People love them now. They're not going to stop loving them. Their loyal customers are second to none when it comes to customer loyalty. And these numbers are a combination of Value Line, me, a couple of financial charts, Guru Focus, Y charts. I want to give credit to, I don't have them on there, but this isn't just me off the top of my head. Operating margin, you see it flattens out. I think I initially had that going higher, but Dr. Roney kind of pointed out to me that 15% would really be high and then looking at the competitors in single digits, staying at above 10% would be quite an accomplishment over the next 5-6 years. The ROE, ROI, I wanted to bring the ROE down a little bit, and I couldn't get the chart to change, but it should be a little bit closer to 10% than north of 15. And the leverage continues to go down as they run their unless there's some major acquisitions or something going on, they should be in a good position to drive that debt and that leverage down.
Yeah, I think, Mark, we worked on this together a little bit, didn't we?
Yes, sir.
Yeah, and I think that served a good purpose. And again, I want to compliment you. So I'm taking some pretty strong notes for Mark here. But the result of our discussions and Mark's reasoning, especially when he used some other sources, was just not going to take Value Line's projections and slap them on some charts and say, okay, that's our goal. Because and whenever we look at these sources from financial advisory services, you got to apply a little bit of common sense to them. And when we did that, we found that we just didn't want to accept what Value Line served up to us, right?
Yes, sir.
That's the right attitude.
Well, thank you. As far as debt, look at that finally starting to move down a little bit from long-term debt and equity growing, where then you'll have capital kind of going in the same direction. Those are in line with everything I've read. Just assuming no big economic problems, they should be on a steady track.
Yeah, no, a typical financial analyst would say, no, wait a minute, if they're going to grow, and you said they're going to grow, then my golly, they're going to have some debt just to finance the growth of their physical assets and the like. But then you say, you got to put yourself in the place of, Toyota's management, and the expansions don't go forever. And not only that, interest rates are rising. So we like a nice, strong financial position. So we're going to pay down some of this debt, and we're going to use our profit to fund our growth internally because we do have good cash flow. So here we have debt going down, equity going up because we're retaining earnings. My golly, you're right. Leverage is going to come down. Is it going to get that low? I don't know. But it's going to come down. And so these charts tell a story. And what we look for, what graders like myself look for, is what's called internal consistency. And these charts all hang together. They tell the same story. So we're looking good.
All right. And here's just the numbers that we were looking at earlier, just kind of in number form.
If there happened to be another instructor in the audience, the last remarks I made would be particularly applicable to other instructors. Okay.
I'm on it.
Good to hear Dr. Ward out there, still with us. Here are by the numbers, just essentially what all the charts just showed up. Good snapshot of where the company could and should be by 2021. And the percent growth
sort of wraps it all up. One of the things that an analyst and Wall Street would look at is the fact that although sales go up by almost 18%, equity grows a little more slowly. And that, I think I can get to that point because we don't get much of a goose in operating margin. But normally, what we like to see is sales go up and earnings and the retained earnings go up a little faster. So this is not out of the realm of possibility, but it would be something that a guy at Value Line, frankly, would pick up on and just want to understand a little better. There's no reason why this can't be the case, though. And a perfectly good explanation could be the one that you've already given us. They bought back some more stock, or they paid they paid dividends and add a little stock buyback, but that'll bring equity down again. So this table is not unreasonable. It just needs an explanation if we were in the real world, and we're not in the real world here. So but these are reasonable numbers. So I've already said more than I should.
Fair enough. And I believe non-financial goals.
Yeah, well, I was going to ask. I don't see a whole lot here. We're going to go straight to implementation from here. I hope you're going to explain something about non-financial goals, because we don't have many slides on them.
I don't. I'm handing that off, I believe, to someone else. I was too sick to go through the run-through.
Okay.
I believe Dina's behind me, but I can do non-financial goals. I apologize.
Well, is there somebody else on the team that needs to pick it up here? Anybody?
I'm going to be doing some of that's covered in strategy and implementation. Yes, sir.
Yeah, I think we moved it.
The non-financial goals. So
Yes.
they're going to be objectives of strategy. All right.
Yep. Mm-hmm.
Okay. I'll play.
I'll move it over to Dina. Thank you.
Well, is there anything at all you want to tell us? Like, well, we see it. We need to increase our market shares. Okay. And we need to increase our product line.
Yeah.
Okay.
And yeah, we kind of split that one up right there. This is kind of where Dina picks up and I fade back, I guess. But
Okay.
I think there are more details to come.
You did a good job.
All right, thank you.
Dina?
Yes. Okay, let's get into some strategy and implementation. Looking at their generic strategies, the capabilities that they are going to be looking forward to are their ability for innovation. Toyota is definitely known for their innovation and ability to come up with new product and quality product at a low cost. They're going to be looking at that innovation through self-driving systems, through the continuation of development through the hybrids, and advances in safety technology. And we're going to go over some of the safety technology initiatives a little bit later, so I'm not going to get too far into those. And of course, as always, quality, efficiency, and customer responsiveness. We spoke about that earlier. Definitely looking into that low cost. They're wanting to meet those unmet needs with their customer base, trying to get quality cars at low cost.
Your textbook included quality, efficiency, customer responsiveness, and innovation as the what are they?
Building blocks of competitive advantage.
Exactly. So here they are. Your textbook also referred to something called generic strategy, and in the lecture, strategic objectives as low cost and differentiation. Those were the so-called generic objectives. Now, there's nothing wrong with including these as well, but if we included either least cost or or differentiation, where would we put Toyota?
In terms of how they compare to other brands?
Well, of course, least cost is by definition a comparison, and differentiation is also a comparison of our product versus competition. But least cost and differentiation are the terms for generic strategy. That's the frame of reference that Porter was referring to when he coined the term generic strategy. What is that in your chapter 5, I think, of your book? How do you guys as a team see least cost and differentiation for Toyota?
I personally think they use both. Obviously, to produce quality, you can never just go off of a low cost strategy, but you can definitely try to meet that, or not meet that, but come close, I guess you could say. But differentiation and differentiating their product from competitors is, I would say, more what they do than doing a least cost.
Mm-hmm.
That's my take on it. But I do think that they somewhat use both strategies. Like I said, I don't, with having that quality, it'll never just be low cost.
I agree with you. I also was trying desperately to make this figure get all the way around, and I stopped too soon. But I was trying to make it point to from least cost and differentiation to quality, efficiency, and innovation. We might as well put innovation here, just because that would fill it out completely. If I'm able to do that. Whoops, there we go. Let's see if I can. Well, we'll see. Maybe not. I give up.
You can cut and paste the innovation that's already there. Just cut it.
Oh, that's a great idea. Yeah, thank you. That's a super idea. Thank you.
You're welcome.
I should have thought of that. Of course, if you're a klutz, you still have problems. And since I'm a klutz, I'm still having problems. Well, okay. I'll move it over after the show. Yeah. So with the building blocks of competitive advantage, we get least cost and differentiation. There's this nice tight relationship between them. I think that Fallon put her finger on it. There's no question about the fact that because of its efficiency and its competences in operations, Toyota, compared to other auto manufacturers, actually can be considered to be a least cost competitor. Quite remarkable. Rarely does a company deserve that term. Then we're well aware that because of all of its quality and its innovations with cars like the Prius and a whole lot of other innovations, Toyota clearly is seeking differentiation as well. And we call this a hybrid strategy among the generics, right? It's a combination of low cost and differentiation. Okay, and then in addition, we can refer to these building blocks of competitive advantage that get us to least cost and differentiation. And as a matter of fact, if you look at one of the introductions to one of your chapters, and I really don't recall the chapter number, but there's actually a diagram that shows the relationship between the building blocks of competitive advantage, least efficiency, quality, customer responsiveness, and innovation, and least cost and differentiation to provide competitive advantage. So now that we've got least cost and differentiation there, this is a good slide. Okay. Shall we move on?
Yes, we shall.
Okay.
Okay, so we're going to be going into Ansoff's matrix. We're going to be going over the market penetration, product development, market development, and product proliferation.
Okay.
Can we go on? For market penetration, we know that it's expanding market share in existing markets. The commercials that are geared towards the younger drivers in different markets, such as in the European market, they make commercials specifically for a car called the Aygo. It's a low-cost car that offers a lot of style and technology, and it's marketed directly towards the younger drivers, like we said earlier, the college students or the folks just getting out on their own that still want something stylish. They don't want to drive mom and dad's old rust bucket. They kind of want something that represents their style. And Toyota is definitely driving in on that by marketing directly to them. They want to reach the eco-friendly consumer with the Go Green initiatives, and those are worldwide. They have those in every market that they're present in. In UK, it's called the Zero Impact Environmental Challenge. In South Africa, it's still called the Environmental 2050, but it's the same principles, just tweaked slightly in every different market. So the challenge itself has 6 challenges within it. And Toyota is challenging itself to produce vehicles eventually that have 0 CO2 emissions. They want to have 0 CO2 plants. They're trying to optimize their water usage and optimize and minimize their water usage. They would like to have products that have a life cycle of 0 CO2 emissions. They want to impress upon their employees recycling. They have recycling initiatives as well. And what they're really aiming for in the future is a society that's in harmony with nature. So Toyota wants to produce really a bunch of tree huggers, and I applaud them for that initiative. At least they're doing their part, to reduce their carbon footprint as much as they possibly can. Also in reference to market penetration, we're going to be looking at the Toyota Gazoo Racing. And that's something that's similar to what we have here. That's NASCAR, the little matchbox cars that we used to play with when we were younger, or at least I did. And that's getting into the NASCAR style customer market. Of course, they're looking for the family conscious who focus on safety, and they want that low cost. They want a low cost vehicle that's still going to protect them, and they can have the baby on board sticker in the back, and they don't have to worry about their families. If they get into an accident, they want to feel like they're in a safe vehicle, but at a low cost at the same time. They also want to exploit the global dealer system with promotions and superior customer service. If you've gone in to try to get your vehicle serviced, you're going to expect superior customer service from Toyota, and they try to maintain that throughout all of their markets.
Yeah, when we were hearing, when we were looking at the critical success factor scorecard with Mark, nobody got an A for their dealer system, right?
Correct.
And so I actually was going to start adding another bullet there, and then I thought, well, Dina's got the dealer system there. That's what matters. But it's not just to exploit it, but to develop it, right? The dealers are the ones that get the sales. Ultimately, the manufacturer designs and produces a sellable car, but it's the dealer that puts the car in the hands of the consumer, and the consumer on the road in that car. And so it's very difficult to develop a dealer system because you don't have all that much control of the dealer. You have some, but and this turns out to be one of the real challenges for large automobile corporations, simply because they don't have all the control that they wish they had, and sometimes they also don't have the smarts. How do you make a dealer system superior to other dealer systems? It's a question that auto companies spend a whole lot of time on. Do you want me to switch it now?
Yes, please.
Okay.
Okay, so we're going into product development, which are new products for the existing market. Environmental technology. They're looking into hydrogen fuel cells, which produce the 0 CO2 emissions, which was a part of their their environmental challenges. They have started producing a vehicle called I'm hoping I'm pronouncing it right, Miria. That production started last year in 2016, and it does run on hydrogen fuel cells, and it produces 0 CO2 emissions right now. So they're hoping to put that vehicle out on the market, get those penetrating the market as quickly as possible. In reference to safety technology, they're improving upon their parking assist and your lane departure. And they've got technology now that will alert the driver when they're in a dangerous situation. It turns on your high beams automatically. They're really trying to take a lot of the safety out of the driver's hands and put it on the shoulders of the vehicle, which is actually a little scary. Self-driving car seems to be right around the corner. I don't know how comfortable, I know I'm not comfortable with it, but it is peeking its head right around the corner, and Toyota is definitely tiptoeing into that market. The automated driving hybrids, they're still going to continue to produce those and improve upon them. The Toyota Scion was developed in 2003, and again, it appeals just to those younger buyers with the low cost and the stylish bodies. Now, our Toyota Scion would be comparable to what the European version of the Aygo is, directly marketed towards the younger generations. And for our older generations who have that disposable income, who have the ability to spend a little bit more, but they still want the quality that they know they're going to get with Toyota, they can branch into that Lexus market and get that luxurious vehicle that they were looking for. So market development, new market segments for existing products. This is just a table that shows when Toyota entered what market. So I'm not going to go over each one of these, but I will mention that in China in 1980, they didn't actually start producing cars. They kind of just stuck their foot in a slamming door and gave themselves a little bit of wiggle room. They created the TASS, which is the Toyota Authorized Service Station. So they weren't actually manufacturing vehicles at this time, but like I said, they kind of slivered in there and gave themselves some roots so that they could eventually start the production in China. NUMMI, which we will go into, we're going to speak about again in another slide, but
Good.
NUMMI is the New United Motor Manufacturing Incorporated. It's a joint venture with Toyota and General Motors. They were originally producing Corollas and Novas, if anybody remembers those. They were produced in the General Motors plant because previously they were exporting all those cars. So they got together, did a little joint venture and said, let's make these cars on U.S. soil so we can cut down our export costs. Finally, in 1994, China decided to let Toyota go ahead and start producing vehicles there. But they held them on a very tight leash in order to do so. They put them under what was called the Automobile Industry Policy, which said you were allowed 3 large vehicles, 2 mid-sized vehicles, and 2 compact cars. And that was all that Toyota was allowed to produce at that time. Of course, eventually it's gotten better, but to start out with, they were basically kept on a leash as to what they could and couldn't do. Ready for the next one. Product proliferation, which are new products for new markets. Again, the fuel cell technology, the Myria vehicle that's coming out with the 0 emissions. They have a really interesting system, which I thought that this was really cool. It's called HEMS, the Home Energy Management System. And it allows for you to plug your vehicle up to your home and cut down on electricity costs. So you can charge your vehicle from your house or vice versa. Your vehicle can charge your house or your house can charge your vehicle. So not only are you cutting down on gas prices as you're buying a car and traveling back and forth, but you're also cutting down on your electric bill. And that is going to be extremely attractive to buyers coming into the market. It's a really cool, it's a very cool thought process there. Boats, again, they're entering into the boat market. Well, they've been in the boat market for a little bit. They kind of laid off on that, but now they're getting back into it a little bit heavier, getting into all kinds of watercrafts, jet skis, yachts, things of that nature. If you recall in the previous slide when we talked about joint ventures, they did do a venture with the Cascade Corporation, and they are venturing into loader attachments, and they started that venture in 2013. You're shaking your head at me.
Oh yeah, I'm shaking. We talked about this in a team meeting. That still just mystifies me. I've worked with Cascade. I believe they're out in Washington State, and It's been a while, but I know the company and I know its products, and I cannot understand why Toyota has anything to do with them. And that has absolutely nothing to do with this case. So do you want to move on?
They probably have a little something up their sleeve.
They may
Maybe.
have something up their sleeve,
Right.
but what they would have to have is buying a company that makes front-end loaders like a forklift company. Yeah.
So horizontal and vertical integration, acquisitions and mergers and their joint ventures is what we're going to be discussing here.
Okay.
Again, I'm not going to go over all of these. I'm just going to hit some of the highlights. In reference to the acquisitions and mergers, the one that really stood out to me during the research was the Boston Dynamics Corporation, which is a robotics company. And when we're talking about the front end loaders from Cascade, if in my mind, what I'm thinking about is when you're in a plant and it uses those little forklift arms and it raises things up and it puts them in the truck.
Yeah.
If you look at robotics that Boston has made, they have these little, well, they're not really little, but they're, good sized robots. And on the front of them, they have exactly what looks like a front loader.
Sure.
So they could be using that technology from Cascade to parlay that in something in robotics. In my head, it makes sense. That could be where that path is leading. I'm not sure.
In my head, that makes sense too. But it certainly is a far cry from the automotive industry. But what you say, it does make perfect sense.
Yeah.
I'm quite familiar with Boston Dynamics too, so this is certainly product proliferation for Toyota. I mean, they're going where no Toyota has gone before.
If they tell you, let's go places, that's what they're trying to do.
Yeah. All right. Joint ventures?
Yes. Again, with the NUMMI, Toyota and General Motors in 1984. I thought it was interesting to put a failed joint venture in there between Toyota and Ford, which talks of a joint venture to make a hybrid pickup truck. The dealing started in 2011. They went back and forth for years. They couldn't figure out paperwork, and they just couldn't seem to get things together. And all of a sudden, Ford backs out of the deal. And what is rumored is that Ford just wanted the blueprints for the hybrid so they can produce their own hybrid truck and not have to, share in the spoils with Toyota. And there might be some truth to that because it is rumored that Toyota is coming out with a hybrid pickup. So unfortunately, that joint venture didn't work out. Didn't work out for Toyota, and it may have worked out for Ford. But yeah, that's a failed joint venture. We can go on to the next.
Oh, okay. By the way, if Toyota should acquire a company like Hyster, which makes forklift trucks to work within plants, and there are a couple other companies that make forklift trucks. If you put that together with Cascade and Boston Dynamics, you might just get something like you were thinking about, Dina, only now you've got a vehicle. So it's remotely possible that you've predicted one of Toyota's future moves. If so, you get credit for being a real imaginative strategist.
If they're hiring, please let me know. Put in an application.
But isn't Toyota in the forklift manufacturing business?
Not that I'm aware of.
I didn't see anything in reference to that. Cascade was as close as they got.
There are a couple of Japanese forklift manufacturers, but I don't think Toyota is one of them.
Sorry to interject. I think Daihatsu does forklifts.
Daihatsu.
And they were partially owned by Toyota, and then I think in 2016 they bought out the rest of Daihatsu.
They did, but Daihatsu, from what I was reading, was known more for their mini vehicles, their little compact ugly little things.
And components. Daihatsu made components, and they also made small vehicles. You're right.
Yeah,
Again, I'm not aware that Daihatsu makes forklift trucks. So, do you think that that's for sure, Jamie, that Daihatsu makes forklifts?
I think they used to, and they may still do components, motors and that sort of thing.
They do make components. Daihatsu does. Okay, the time is really running. We better keep moving. But thank you both for Doug and Jamie for chiming in. It makes the conversation and the meeting more interesting when we do have participation. Nina?
Okay, their international strategic approach is global strategy. They achieve low cost, market responsiveness across global markets. The business structure for Toyota is worldwide, as we know. Their process and products are standard worldwide, achieving economies of scale. This is going to be continued on the next slide.
Okay, but we've said that Toyota does things the same. They're producing the same product worldwide, their cars, okay? And they locate in the global strategy, unlike the international, the complete system isn't located in every country, but we locate our assets where it's most economic to place them. So we'll put manufacturing facilities where it's economical to do so, even though those facilities may ship their cars to nearby countries, for instance, in Europe or in Asia. We don't have to have the same operation in every country, but it's the standard process and essentially the same product or the same product line. That works for me. This is a global model.
Consumers, like we said earlier, they're becoming more eco-friendly and a lot more price conscious. People are wanting to have a little bit more money in their pocket, a little bit more disposable income. However, again, they still want that quality product. So your marketing methods must respond to variations in customer needs and preferences between the countries, and that's why you see the different models of cars that are offered in different regions. The local leveraging, which is the flow of skills between subsidiaries in different countries. We basically just said the same thing, that skills can be used in one region in their plant to do the same thing in another region halfway across the world. It's a standard process that each worker can do, minus the language barrier that might present itself, but they would still be able to do the same job regardless of where they were.
Yeah, local leveraging is one of the characteristics of the transnational model, where transnational, what we try to do is recognize that a global standard model like this one can take advantage of unique characteristics in different countries. Maybe they have better automation or better raw material or what have you. But what will happen in a different business model is that a technique will be developed that can then be transferred elsewhere in the world within this great big system. So local leveraging is likely to be found in discussions of transnational models, as opposed to global standardization, where you sort of have an amoeba and you just locate the same kind of assets wherever it's most convenient. And it almost looks like you're trying to move toward a transnational model here, because in your second bullet, you say, yeah, we make a standard product, a car or a pickup truck, but we make them differently in different countries depending upon what the market requires. I think that although both of these bullets have some truth to them, it's a matter of degree. And although it is certainly true that we make a different family or portfolio of cars in different parts of the world and different countries, depending on whether they're developed or not, and how highly developed their highway system is. It really is a matter of degree, and at the end of the day, they're on a running gear platform. they've got a chassis and it's still a car, it's still a pickup truck. No doubt about it. We certainly try to use local leveraging wherever we can, but in a global standardized model, the technology, the process, the way we do it tends to be developed centrally at headquarters, and that is a characteristic of the global standardization model, that the process and the major decisions about the business model are made centrally rather than out there in the divisions. So both of these bullets are true, but for folks who are looking at this video after we put it up on the Moodle shell, I want to make sure that we understand that, relatively speaking, what we saw on the earlier slide is probably what drives us to the decision that this is a global model. Okay.
Okay. So in reference to implementation, the question that's asked is this organization structured adequately to implement the future strategy? And we're going to go over that answer in the next slide. The answer would be yes. I'm not going to go into too much detail about what Kanban and Kaizen is or are, because I think Ms. Fallon went over that in awesome detail earlier. But to continue their strategy in the future, we need to increase our presence in Brazil. We spoke about that earlier. There is a new engine plant and facilities being built in Brazil. NUMMI, again, that joint venture is still up and running, so we can continue to use that asset for strategy in the future. They have a no layoff policy for their employees, which during the recession in 2008, Toyota guaranteed its employees that they wouldn't be firing anybody even with the recession. And in Kentucky, they had to close a plant, but each one of those employees that potentially could have lost their jobs were offered relocation to another plant just to make sure that they were still employed. And the importance of that is Toyota realizes that happy employees make happy products. So to keep your employees happy, they will continue to produce quality products, which will keep them producing at a level that they are expected to produce at with those happy employees in the future, and continue with that strategy. In reference to leadership, they have a global hierarchy with regional and business unit heads that report to global headquarters in Japan. This is important because they can keep a close watch on, how their business is being run. And like Fallon said earlier, when there's an issue, when something is wrong or when something malfunctions, they can stop everything and say, this is a problem, we need to fix it. And that doesn't just apply to the manufacturing of products, but it also applies to processes and the way that the business is being run as well. Geographic regions and product-based divisions. They have regional divisions that support products and services based on the regional market conditions. And in reference to product-based divisions, they support development of brands and product lines. So if you have the support of your company to continue with these innovations, I think they will definitely be very lucrative as they are now in the future.
Just before we flip the slide, I don't want to let this NUMMI venture. It may be that but it looks like we've only got one more slide to go here. So, or is this it? Is this the last one? Yeah, it is.
That is the curtain call.
Sorry?
He said that slide is the curtain call.
That's it. Okay.
That's it.
There's one thing about NUMMI. I guess maybe we can stop the sharing now and let everybody into the act. Golly, we still have some of the folks that joined us earlier are still with us. But Professor Ward said goodbye. Oh my, sorry, we lost him. Oh no, he's there. He's still there. He's still there. It's dark there. He's got. We can't see him. He's hiding in the background. The NUMMI was definitive for Toyota. And it also is characteristic of something that Toyota has done a number of times, especially in this pivotal market of China. and that is to do joint ventures. NUMMI was a joint venture, and Toyota has done joint ventures and alliances. It's especially doing them now as it partners with BMW, for instance, to exploit the electric car some more in some more ways. But in order to get to China, Toyota has had to do a lot of alliances and joint ventures, and that is traditionally the way that foreign companies have gone into China, because it's such a unique market and has its own, particular requirements that aren't like those that we have in the West. So the smart move whenever you're moving into another country that's so much different than your own is to take advantage of someone else's knowledge, normally by doing either a real strategic alliance, a real, where there's a lot of interplay between the partners, or as NUMMI, a joint venture. And in NUMMI, the Japanese really did not have a great deal of experience in the United States. And the cars that they had imported into the United States were looked upon as sort of second rate. We sometimes just call them sardine cans. Then they look kind of, you should have seen a Toyota back in the old days. It was just sort of a square box on wheels. Very unimpressive. But Toyota had some smart management, and at the same time that was going on, General Motors was realizing that it had no idea how to make a small car. Just didn't know how. All they made was gas guzzlers. And then we had, the Arab oil embargo. Boy, did that change people's attitudes. And so each of these companies had a reason to learn something from the other. The Japanese wanted to learn how to do business in the United States and what the U.S. market was, and how U.S. dealers are different from those in Japan, and just how to do business in the United States, and also what of course the U.S. consumers wanted, which was a lot sexier, more interesting, feature-laden car than was common in Japan at the time. On the other hand, General Motors just want to know what the hell these people in Japan were doing. Kaizen, what? Kanban, what's that? I can what? Well, you can or you can't. Can ban, can boom. What the hell is that? But for some reason, they won this thing called the Deming Prize, and everybody seems to think their quality is better than ours. So let's do a joint venture. We've got this plant in Fremont, California, which is outside of San Francisco. Let's put it there. By the way, they closed NUMMI a few years ago. What became of the plant at Fremont? It eventually was occupied by another company. Have you heard which one? It's a little outfit called Tesla. Tesla now occupies the NUMMI plant at Fremont. In any event, that was a joint venture, and it's classic. It's in lots and lots of case studies because it showed how each party learned from the other and had an incentive to learn what they didn't know how to do. Most of us think that at the end of the day, Toyota won that little game because they learned more about America than GM learned about making small cars. And the proof of the pudding is in the eating. Toyota has captured a lot of market share points. So they came out the winner on that venture. But in China, we see Toyota trying to get into this difficult market by teaming up with Chinese partners who are already accepted, since they're not as accepted since they're Japanese, right? And presumably that is the right formula. Okay, just wanted to pin down this NUMMI thing, because NUMMI is really a turning point in the history of the company. Well, my golly, we've set a record. We've gone for 3 hours. And Dina is ready to fall over from, and Mark, let's see, Jamie, he's, all he wants to do is, I don't know, look a little tired too. Hi, Anna. Hi, Crystal. Is there anything, or Wendy, is there anything anybody wants to ask or add or?
I have one quick question.
What, Doug?
I have one quick question.
Good.
Looking at the unemployment rates of the countries that the team identified, why is China's unemployment rate been stable for the last decade around 4%?
This is Rebecca. Can you hear me?
Yes.
Yeah.
Because for some reason, my thing's not showing up there. I would have to go back and research that. When I was pulling the numbers, I don't remember seeing anything specifically to that, but that would be definitely something I would go look at.
Anybody else have any ideas?
Because they live forever and they just don't ever quit their jobs.
Well, you've got sort of the right idea. Doug, do you have any suggestions, or would you like me to try to give you an answer?
Well, let me share what I think is occurring, then please add
Okay.
the gaps. But it seems to me that China is the largest industrial society in the world. They have one of the largest populations in the world. They have industrial base as well as a rural base. But China is a communist country. And I'm not confident that the Chinese are accurately reporting the data correctly. China has been accused of currency manipulation. But as a result of that, I would have to take that 4% stabilization over the last decade with a grain of salt. I just don't believe it.
Whoops. I don't know what I just did, but I just managed to deal myself out of the picture here. Do you all see me? I don't see you any longer.
Yes.
I can see it.
You do see me?
Yes.
Okay, then I'll leave well enough alone. And
I actually just looked up an article from Bloomberg that said exactly what you just said, that they're actually estimating it's probably about 12.9% since 2012. So yeah, they're saying it has to do with the authorities, I guess.
Yeah, and I think for me, as strategists and as people who do research, this is where you have to take some of the data that's being given and take it with a grain of salt and use multiple sources to validate it and not just trust. I love Value Line, but you just can't trust just Value Line.
yeah, Value Line's data, insofar as the actuals, are pulled right off of the financial statement. So up until the current year, you can trust those. It's the projections in Value Line that we would ask a question about. A little different answer on China. China's, for a couple of decades, has been an industrial economy as opposed to a consumer economy. And consumer economies tend to be a little more volatile, a little more variable than industrial economies. You may have noticed in a couple of those economic charts lines, although some of them were kind of crowded. But China's economy did not dip down, for instance, during the 2008-9 recession. So if you look at some of the economic graphs and some of the other presentations, you'll notice that when the GDP of Europe and the US dipped down in the recession, that did not happen in China, nor did it happen in the recession prior. And the reason is that it's a managed economy. It's I think they would call themselves communists, but I think really it's more like a state-managed capitalism at this time. You've got a lot of companies in China there where you can buy stock, for instance, and they do compete. As this economy has grown, and it's grown to meet the 5-year plans of the central government, everybody worked. And so was it a straight line at 4%? Probably not. Was it around 4% for years and years and years? Probably yes. Now, is it 12% today? I really doubt that. Is it 4%? I doubt that too. I don't know what it is, but the primary reason why China's unemployment rate has been so low for so long is quite simply the entire industrial base of the economy, as well as its infrastructure, has simply been growing flat out, and the government sees to it that anybody who can work does.
I like your response better than mine.
Well, I like them both, Doug. I think I think that whenever we're dealing with a developing economy today, the culprit is India. I mean, when Prime Minister Modi was recently elected, and basically because of dissatisfaction with the prior government, that new administration went right out and said, "You're right. Our economic data are all made up, and therefore we're gonna take them off the books, and we're gonna try to go recreate them." And India right now is trying to recreate its recent economic record because it's incredible. And so you do get that. And I'm sure that just because one of the things we know about China is that it manufactures its exchange rate to keep it low enough to encourage exports from China to Europe and the United States. So there's plenty of that going on. The real interesting question, and it's so late, I'm sure we don't have time to talk about it here, but sometime for those of you who are at all interested, the real debate is what is China's political system? All we know is for sure that it's different than ours. It is not the Marxian communist, to each according to his needs, from each according to his ability. That's right out of Marx, Engels, just direct quote. What's in China is definitely state managed. There is definitely competition. There is definitely just one party in charge, and all the decisions are made centrally. And the government owns a whole lot of corporations, but that's true in France also. So what is the Chinese system? And lots of people who worry about things like that spend long hours debating exactly what China's system is. And all we know for sure is it's different. And with that, I'm sure I've put all of you to sleep if you weren't asleep before, if you weren't sleepy enough before, here at 10:15 in the evening. Anything else? Anybody else? Looks like then we're going to wrap it up. For your information, I'm ambivalent about what the discussion topic will be. And that is because this is such a large case with so many variations. I'll tell you, if you're at all interested, what my options seem to be. And that I think we heard from 3 different people on the environmental assessment, and that took a very large portion of the presentation. So it's really important in this case, and it really is. So I think we might want to simply ask how have the economic market and industry conditions affected Toyota's performance, and what particular have been Toyota's greatest challenges, and where is its greatest growth potential, but more importantly, how did it meet those challenges? I think that's a really rich question. There's another question and topic, and it may be even just a tad more interesting to me than the other one. But again, my mind isn't made up. I'm really going to have to think about it. But Toyota clearly. Do you remember at the end of the lecture on strategy, and one of our chapters on strategy, one of the later chapters, was about competing on competences, okay? So we have that matrix with filling in the blanks, Premier plus 10, mega opportunities, and the white spaces, right? But how Toyota has competed and how it has gained competitive advantage, and how it has drawn on and developed these building blocks of competitive advantage: efficiency, quality, innovation, customer responsiveness. Those things are all tied together. And so one of the possibilities would be simply to ask you to write a little paper on how Toyota's strategy has been based on the competences, and how Toyota has competed on and with its competences. I think that's a real rip snorter. My real question is, among other things, which of these questions is going to be more easily answered in the short time we have before the curtain falls on this course? If you want something that's just a little more manageable, the third question that and by the way, these are all from my notes during your presentation here, which is how each one of these discussion questions has been ginned up, with a little pre-thought perhaps. But just what exactly is Toyota's international strategy? How we talked about some options between global and transnational, but what exactly is the strategy, and what exactly have been the approach to implement that international strategy? For instance, joint ventures like NUMMI. Maybe you could use the Ansoff matrix to talk about exactly how that international strategy gets put together. So it'll be one of those three. Describe the international strategy and how it was enacted. How has Toyota's business environment affected its performance potential, or how has Toyota's strategy been based on competing on competences? Does anybody have a preference of one over the other?
Number 3.
Number 3, which is because it's easier.
Because I still think it's transnational.
You can still think it's transnational. Okay.
I am sticking to my guns.
Okay. Well, but your first slide said it was global. Which guns are we talking about?
Well, that was your
Is it
gun.
the left gun or the right gun?
You're carrying more of a 45. I've got more of a 380. Your gun's packed a little more punch than mine.
But I'd rather have a 380. I can hit what I aim at with a 380. But your first slide said global. Your second slide argued for transnational. Anybody else have a vote? Fallon, do you like one more than the other?
Oh no, I was just
Mark, Jamie, huh? Fallon? No.
no 2 or 3.
2 or 3. Okay.
2 or 3.
Yeah, 2 or 3.
2 or 3.
Yeah.
Yes, sir.
What do you want to bet it'll be 1? Okay.
Probably. I like 2 personally.
Do you 2, the competing on capabilities?
Yeah, I like the building blocks and all that. It's interesting. like that.
I've got a warm feeling for competing on capabilities too, because I think that, and you know what I should do is turn on, well, no, I was going to turn off the recorder, but anybody listening to this would probably benefit from the conversation if they could last that long. If there's one thing that Toyota has stood out for in the record books, it's stuff like Kanban and Kaizen innovating, not just to be different, but innovating with its competences, with its capabilities. Premier Plus 10, they developed the capabilities to produce what they started out to do was make an electric car, and they realized there weren't enough charging stations, and it would be a while till we get those. So they said, gosh, we've got to develop the capability to do something in between. We've got to have something that is both electric and gasoline. Let's call it a hybrid. It's a little bit of both. And boom, 15 years later, when they developed all those capabilities first, then they started to announce this thing that lost $1,000 per model. And then in the second version, it broke even. And the third version made a lot of profit. To pull something like that off, you've got to have deep reserves of capabilities. You just don't sort of pull together what you've got. You've got to really develop these capabilities. It takes quite a while to develop them before you can deploy and exploit them. So maybe we're getting a hint here. Maybe we're sort of, I think so. Feels pretty good. All right. I want to thank you very much for lasting this long. It is 10:30. This sets a record. It's an hour longer than all of the others that we've been here. So
Sorry, guys.
thank you very
I think
much.
that just means we had great information that we needed to discuss. I feel like that's an okay thing.
I think that's an okay thing too, Dina. All right. Thank you very much. I've enjoyed spending these last 7 weeks with you. I've learned, see, look, Mark showed me how to do a goals hierarchy tonight. So if I hadn't have been here with you, I wouldn't know how to do my own models. Good thing I was here.
Yeah.
Thank you very much. I'm going to end the meeting now.
Thank you.
All right?
Bye.
Goodbye.
Thank you.
Thank you. Good night.
Good night.